Guys, how you doing? I'm Ryan Mack, this is the Trading Guys, and today I'm just going to be running through fundamentals with you, alright? There are many people around the world that trade and don't bother with fundamentals. Now, are fundamentals essential to make money in the markets? Well, you could say no to that, right? Because I used to trade for years, going off technicals only and still make money. So it's not that it's essential, but it will definitely help you massively. Fundamentals are essentially what moves the market, right? It's how the banks trade. I'm not trying to say I trade like the banks. I know a lot of fucking idiots say that. But it's how the banks trade, right? And what I mean by that is a banker's job / trader's job, in the bank is to make as much profit as possible using the lowest risk. So therefore, his job in trading is to pick, choose. This is a key thing for traders. You can choose what you trade. Just because you see something moving doesn't mean you have to take it, right? You have the free will and the choice to choose what you wish to enter and what you don't. And there will be many reasons for that. And we're going to cover that throughout this video, okay? There's been plenty of trades where it's hit certain things for me, and I've been like, right, it's hit here, it's hit there. Nah, I'm just going to leave it, and I just walk away from the trade. Sometimes you're like, oh, fuck, maybe I shouldn't have left that because it comes in good, right? And sometimes you're like, thank God I left that because it was as dog shit as I thought, But the point is we can choose what we wish to trade, right? We don't have to shoot at everything that moves. We're not machine gunners. We want to be snipers. Now, your job if you are a trader in a large institution, right? And by the way, just to let you know, I didn't start as a retail trader. I am, trading from home now for 3 brokers, managing PAM accounts. Okay, it's like copy trader, but we call it PAM accounts. Okay, similar but slightly different. I started off trading. This is why I'm in Asia now, working for a trading company as a business development manager. I'd done that for a year and a half. I became best mates with a fucking chief trader. We were both, foreigners in a foreign land. We became best mates, both as English speakers. We used to go for lunch every day. And a year and a half into me doing business development management for the trading firm, he basically said to me one day in lunch, Rai, do you want to learn how to trade? And I said, fucking right. So I then learned how to trade from him, and I then started trading for the company for a further 4 years as a trader for a large firm. COVID kicked in. We all started trading from home, and about 3-4 months into it, they called me and they were like, right, we're going to close this office in Indonesia. You're more than willing to come and work with us, but you're going to have to move. Excuse me. You're going to have to move countries. And I was like, lads, look, I cannot tell you how much I appreciate everything you've ever done for me. They essentially changed my life by giving me that opportunity to learn how to trade at such a phenomenal level through their company and have such great, teachers, mentors, right? But I'd already bought my apartments and stuff. I'd already bought my cars here. I've already got pets here. I've got a wife here. I learnt the fucking language, I was like, look, I've built my entire life here, so I'm not moving. So I then just started trading from home. Well, actually, sorry, I need to backtrack. I was already trading from home because the 3 months where COVID first kicked in, we were all trading from home, right? But then 3 months after it, they then binned that off. So now that I'm here, I've got a beautiful setup in my apartment, and I was only trading my own funds for literally, I don't even think it lasted a week. And then because I had so many connections in the trading world, from going to Hong Kong events and blah, blah, blah for so long, one of my mates called me who was a CEO of a trading firm, and he's like, Rai, I heard you don't work for them anymore. Do you want to trade my PAM accounts for me, which is their clients' accounts? And I was like, fucking right. And then I got one, and then I done well, and I got another one, and now I've got 3 managed PAM accounts, okay? And I do all my trading live on our Discord. So I have a Discord where I teach people to trade, and I do all of my trading live on Discord. I also done one live yesterday on YouTube, all right? So I'm not shy to physically show people what we're doing and so on and so forth. Sorry, I should top up my yerba mate. It's going to be a long video. So in today's video, I am not going... This is not about me teaching you to trade, right? It's not about me sitting here saying, oh, my way's the highway, my way's better than yours, you have to follow. Absolutely fucking not. You can trade however the fuck you like. I don't give a shit. If it works for you, you fucking crack on. There's a million ways to trade, right? A million ways to trade. My business partner in Discord, he's a scalp trader. He loves scalping and he's fucking phenomenal at it. He doesn't give a shit about fundamentals. He just goes in price action, 10, 20 pips, and he's straight back out. You know, he's the same like my other good friend, Raja Banks. Both of them trade very similar, right? If you're a scalp trader, you don't really need to know fundamentals. Will it help you? Yes, it will. It's very interesting as well. It will help you because you'll have a clearer direction, but it's not essential, okay? I would say if you are a day trader, swing trader, position trader, and you want to hold your trades for a long period of time, then fundamentals are essential, guys. Essential. Because if you don't know fundamentals, anytime you get a pullback in the pair, you're not going to know if that's just a pullback or a reversal. You'll be like, oh, it's a reversal, I'm going to close and take my profits. You take your profits at maybe 200-300 pips, and then the fucking thing runs to 900-1,200 pips, and you're like, for fuck's sake, I could have got 4 times more. And if you knew fundamentals, you would have known that, oh, this is just a pullback. This is just, the institutions taking profit. Because when the big candles move fast, that's when they're taking profit, because they lift profit rapid. But when they enter into trades, when you're trading for a company, an institution, you can't just enter like you and I can enter. You need to stack it. You need to build into your trades. You need to bring it up, pull it back down for a bit of value, lump in, it goes up, pull it back down for a bit of value, and you need to build up your orders. You can't just go all in. So, but when you're taking profit, it's the complete opposite. You can fucking lift the whole lump in one, and that's why you get these big candle pullbacks down, because they're taking lumps of profit. It quickly goes back down to areas of value, and then it'll start building it up again, and the build up is slower, right? But if you know fundamentals, you would know that it's just a pullback. You would know that it's not a reversal. Okay, and we're going to cover why that is in this video. It's because you're going to be looking at economics, essentially. You're going to be looking at this and be like, right, what the fuck does all of that mean, right? Like, you guys are going to be looking at this if you don't understand what you're reading, and you'll be like, oh, look, previous was 57, now it's 56.1, so that's bad, that's negative. No, it's not. It's not fucking negative, and it doesn't help matters any that Forex Factory paints it red, because you just think, oh, red, that must be. Even if you don't know what you're talking about, you're going to look, you're going to see that this number is less than that and go, oh, that's bad. And you're going to see that it's red, and you're going to be like, oh, yeah, it's definitely bad. You don't actually know what you're talking about. You don't understand how to read this and what it actually means. So in this video, I'm going to be covering on that and showing you that how that is incorrect if you think that's bad, and so on. And it's all about building the bigger picture, right? We don't ever just go by one piece of information and then be like, oh, fuck, this is long, this is short. And we also don't go by week on week. We don't look on today and, PMI is strong, go, okay, it's strong. And then next week, PMI numbers are down and go, oh, fuck, it's weak. And that's not how fundamentals work, guys. You don't have to be, they don't change all the time. They work over a very long period of time, okay? So we are going to cover that in this video, and I hope you enjoy it. This is a course that people pay a lot of money for. Genuinely, they can pay. I've seen courses like this fundamental type explanation, go for 500-600 quid. I've seen them going for fucking 1,500 quid. I'm going to put this together for you so that, I know what it's like being fucking broke, waiting for a chance, hoping someone will give you a chance. You're dying to learn, blah, blah, blah. So, yeah, I'm just trying to fucking pay this forward, guys. Before I get into trading, before I got the job as business development management, I was in the army, then I was a bodyguard for years over in Afghanistan and Iraq, made great money. Then I ended up in a position where I was fucking on my arse. I shit you not. I had no money left in the bank. My cars were getting repossessed. I was essentially homeless. I wasn't homeless in the sense of fucking sleeping on the streets, but I was homeless in the sense of I didn't have any fucking home. Like, I had to go, I was couch surfing in my friends' houses. I was couch surfing at my sister's place, It was just fucking horrendous. Then I got this insane fucking job over in Asia. I didn't know it was going to be Asia. The company is all around the world, so they could have sent me anywhere. I get sent to Malaysia, Philippines, Vietnam, and now I'm in Indonesia, the capital city, Jakarta. And I was doing business development management, so basically sales, right? Bringing this trading company more clients from all over, because I was an English speaker, blah, blah, blah. And then I ended up trading, like I told you before, because I became good mates with the fucking top mates with the chief trader. He then said to me, do you want to learn how to trade? And I said, fucking right, okay? So I'm going to explain to you fundamentals. And by the way, just for the record, my chief trader didn't bother his arse with fundamentals. He looked at them, he understood them, but he was like, yeah, I'm just going to do this, because he was actually a lot more short term than me. I prefer. So here's the thing. Look, I'm going to show you this quickly. I don't want to digress, but look, let me just show you oil, right? Just because it's fucking close. Now, oil is massive. It's bearish, right? It sells. It's fucking sells right now. Now, when you say that to people, they'll be like, oh, look, it's flying. Well, it's not really flying, is it? And of course, it's going up. All markets, they will have a direction, which is based on the fundamental direction, right? The true direction. But things just can't keep going down forever, right? So markets need to come back up to areas of value. They'll reject and then they'll melt. It happens time and time and time again, right? It's just the way the markets work. So what in this scenario, right? Demand is fucking tiny for oil. Okay, it's tiny. No fuckers buying it. Last year, China were responsible for buying 70% of the world's fucking oil, right? This year, they've only purchased 20%. They've left a massive 50% fucking window that nobody in the planet can fucking fill, right? So it fucking sells all day long. That's one thing. The things that were making it fly up here, fly up here, fly up here. This was Iran and Israel. This was every time Iran and Israel were kicking off, bang, it was flying up, and then people got bored. So if you look on the 30-minute time frame, you're going to be like, oh my God, it's fucking flying. Look, oil's flying. It's really not. Look on the daily, right, for long term. I mean, if you're scalping, you can crack on, but look in the long term. So look, would you rather, let's go to the hourly time frame, right? Would you rather risk, most of you aren't going to hold this trade to here, right? Let's say you entered here, right? Let's be honest. Be fucking honest with yourself. Don't bullshit yourself, right? Let's say you entered this trade here and it came to here and you saw this candle coming down. Most of you are going to fucking close the trade round about here because you're going to shit your pants that the trade is going to melt away down and you're going to be back at zero or break even, right? Or even at a loss, right? Be honest with yourself. You're probably laughing watching this like, yeah, because I fucking know it. I've been there. I've done it, right? Now, ask yourself this. Are you happy to risk 1% from here to here, right? Here to here, or would you rather just fucking wait and wait till it hits this area of value? Let's say it's here, for example, right? Wait till it hits this area of value. You enter the trade here, and then you risk your stop losses up here, and then you fucking enter the trade here, and then you take it all the way fucking down. Stress fucking free, right? It's the same risk. It's the same amount of risk, except you're going to get 900 fucking pips as opposed to 30, 40, 50 pips. It's the same amount of risk. But people don't like to do it because, one, you need to wait a long time for the trade to get into position, right? And then two, you need to wait a long fucking time for the money to come back. But you're just going to be chasing short-term gains in the 1 hour, the 30-minute, blah, blah, blah. If you enjoy doing that, by all means, you crack on. I'm not saying there's anything wrong with that, okay? I'm not. I understand that it's not everyone's cup of tea to be able to hold trades for a long time. I understand that. If you prefer hourly 30-minute, that's absolutely fine. You crack on. If you prefer the fucking 5-minute, you fill your boots, you know? Everyone's different. Like I said, my business partner does scalps. He fucking hates swing trading. I do swing trading and I fucking hate scalps, okay? We've all got different personalities. We've all got different lifestyles. We've all got different emotional and psychological responses to things, okay? So that's just a kind of brief insight, a brief example on oil. Yes, oil will come up just now, of course it will. Can you take the trade, the buy from here to there? 100% you can take it. You just have to be aware that by taking it, you are taking a trade that has a lower probability of giving you a return, and it has a higher probability of going against you. See, so you're taking a low probability trade, which is high risk. The whole point in trading is to take high probability trades with low risk. Okay, now I'm going to teach you how we do that via fundamentals. All right, so strap yourselves in. Now, this is the one that everyone's familiar with, right? It is Forex Factory. One that's even better than that is this one right here. It's called Trading Economics. Why is it better? You get far much more data, right? Far much more news. What have we got here? Right, let's look at this one. We've got, let me just update this. Thursday. Okay, look, AU, we've got 1, 2, 3, 4, 5. Okay, we've got 5 pieces of news on AU. So let me just open this up. Let me just do that quickly. See what we've got. Where are we? Thursday. AUD. We have got one piece of news on Forex Factory. One piece of news. Trading economics, we've got 5. It's given you far more insight into, the Aussie economy, right? Far more information. Also, it's much faster. So if you are a trader who likes to trade the news, you see here it says 8:15 p.m. That's obviously high impact news, right? The minute the fucking clock strikes 8:15, the numbers are out here instantly, guys, instantly. And if you look at the charts, the market, it's the candles still haven't even moved yet. If you look at Forex Factory, it's still going like this and fucking loading up because it's shit, right? And then by the time Forex Factory gets the news, you look at the market's already fucking flew, right? So trading economics is far better. However, in order to make this video and go through stuff with you, I'm going to use Forex Factory because all of you know how, all of you are familiar with it. And also here, look, when I go to change countries, I'm going to show you, look, it's a fucking massive pain in the arse selecting all the countries, right? It is a massive pain in the arse. But if I go here, it's very simple for me to go through the countries with you, just by clicking it. You know what I mean? So that's why I'm going to use it, okay? So let's just look, let's just choose one. Now, they're all the same, right? PMI, PPI, CPI, it's, each country has their own kind of version of it, but we'll cover it now. So the main ones that traders care about, if we like, is CPI and PPI, okay? We care about them all, which we are going to cover, but we mostly care about CPI, PPI, and central bank rates, blah, 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 which I'm going to explain. So what is the job of a trader, right? The job of a trader in, a large institution, or even us, if you want to call it that, but let's use the institution in this example. The job of a trader is to make the most profit for the bank and using the least amount of risk, i.e. taking the least amount of risk, riskier trades, if you like, the least amount of risk trades, but try and make as much fucking profit as possible, right? That's the fucking job in a sentence, okay? That is the job in a sentence. So how do they do that? How do they choose the trades, right? If you're a banker and you have a $5 billion account, right? And you're about to place $500 million on a trade, right? Are you trying to tell me that you are going to be confident placing a $500 million trade because you've decided to draw a stupid fucking line on your page and one candle has broken it? One fucking candle has broken a stupid fucking line that you've just drawn on your page a second ago, right? I used to do this shit, by the way. That you've just drawn on your page a fucking second ago. Are you happy, willing, and more importantly, confident to drop $500 million fucking dollars in there? Of course you're not. If you're not a psycho fucking path, the answer to that question is, of course I'm not, Ryan, because I'm not a fucking psychopath. Well, then the second question becomes, if you wouldn't do it with $500 million, why are you doing it with 5 grand, 10 grand, 1 grand, whatever the fuck your account is, And look, you'll most commonly find that what will happen is this market will come to here and it'll go, most people get stopped out like this. They'll go, oh, look, it's broke. I'm going to enter a buy. It'll go boom, boom. It'll hit this area of value and then it'll go fuck off. And they're like, oh, how is that possible? How did it go against me? It broke the stupid fucking line that I painted 2 seconds ago. My imaginary little friend, my imaginary fucking supply and demand, a banker wouldn't fucking do that. That's not how they decide to place fucking trades, nor should you, okay? Technical analysis is very important. I'm not saying don't use technical analysis. We need that, right? Everybody needs technical analysis. Bankers use technical analysis, but technical analysis is simply to distinguish the areas of which we should be looking to enter the market and areas of which we should be looking to exit the market. That is it. A candle breaking this fucking line here, it's not a reason to enter the market. If I said to you, why are you taking this trade? And you say, oh, what is your reason for taking this trade? And you say to me, oh, this candle broke this fucking line that I just drew 2 seconds ago. I just put that on there. That, you have to think about this logically, guys. That's not a reason to enter a trade. So what is a reason to enter a trade? Well, it falls back on to economics. If we look at, I know this is USD, this is for the actual education part. I'm going to give you an example separately, right? Let's look at GBP and Japanese yen, okay? So we look at CPI and we're like, fucking hell, CPI is up, fantastic. PPI is up, fantastic. PMI, manufacturing and services are up, fucking fantastic. Average spending is up. Retail sales is up. Average hourly wages are up. Mortgage payments is up. Employment is up. Unemployment is down. Fucking amazing. Fucking amazing. The central bank rate is 4.75. Fucking fantastic. So we now put all the information that we've just looked at for GBP to the left-hand side in our imaginary screen, right? Put that, okay, pound is a powerhouse. It's fucking fantastic. Now we're going to look at Japanese yen. Okay, let's look at Japanese yen. The central bank rate is 0.25%, which is dog shit. I will tell you why 4.75 is good and why 0.25 is shit later on in this video, okay? So Japanese yen, central bank rate 0.25, absolutely dog shit, okay? Employment down, massively down. Unemployment high. Mortgages low. There's low approval rates. Credit card spending dropped. Retail sales dropped. Average hourly wage dropped. GDP dropped. Manufacturing below 50, which means bearish. Services below 50, which means bearish. So you're like, fucking hell, the Japanese yen is absolutely shit. So then you put that to the right-hand side of your imaginary screen. Now you're looking at two screens. You've got all the data for the pound here, the British economy. You've got all the data here in your mind for the Japanese economy. This one's fucking amazing. This one's totally dog shit. Now, I'm a banker, and I'm looking to make fucking profit. So my job is now to look at all this information and say, which one of these two economies is going to give me the highest probability of profit with the lowest probability of risk? Is it the British economy or is it the Japanese economy? It's quite clearly, from the example I've just given you, Stevie Wonder can see it's the fucking British economy which is going to give you the highest return because the fucking central bank rate is 4.75. That means if you're an investor, you're going to get more fucking money back. If you're investing Japanese yen, you're going to get fuck all money back. Even if you do get a return, your return's shit. So right away, you're going to be investing into the British economy. So when you're looking in terms of currency and GJ, what does that tell you? That tells you that you now have a reason to buy pound yen. You're not going to sell it. Now, it doesn't mean you instantly jump on the screen and you're like, I'm going to buy it right now. You need to wait for it to pull. If it's already flying, you need to let the market pull back to areas of value, right? You need to let it pull back to areas of value. That's another fucking video in itself, areas of value, okay? But when you see the market coming down, markets always come down. The banks will take profit when it gets to certain, and as they're taking huge chunks of profit, the market will naturally fucking come melting down. It doesn't mean that they've entered sales. They're just simply taking profit, which is pulling the market down because it's creating huge amounts of liquidity. Once it gets to certain areas, they'll start to build up and it will fly again. And that's the trade. Once it starts coming down, you just ignore, and you take the actual trade in line with fundamentals, in line with data, technical analysis, blah, blah, blah. Can you take it the other way as it's coming down? Yes, you can, but it's a counter trend trade. And what you're doing is, if you're selling GJ based on the example that I've just given you, yeah, you're saying that you believe the Japanese economy is going to give you the greatest return or the greatest yield, the greatest promise of profits over and above the British pound, which is just quite simply not fucking true because the data has told you Japan is fucked, the UK is fucking amazing. That's how they do it, guys. That's how banks find the highest probability trades with the lowest probability of risk. There's always risk, but you don't want to be selling GJ based on the example I've just given you. You don't want to be like, right, I'm going to look for sells on GJ. I'm going to look for the reversal. We're always looking for this fucking reversal. Why? Just let the fucking thing come down and lump in to the actual move. All right. If you are deciding to sell GJ, what you're essentially saying to yourself is you are taking the lowest probability trade of return. That you're taking a trade with the lowest probability of giving you a good profit with the highest fucking potential for risk. The whole game of trading is to lower your risk as much as possible and take the highest probability trades. You will always have trades that go against you regardless, blah, blah, blah. But it's far, far, far less than if you're just drawing stupid fucking lines on your page and, entering it because a candle broke your imaginary fucking line. Do you see what I'm saying? I've been there. I'm not hating on you, man. I've fucking been there. I have been that fucking moron that done that stuff. And I look back at myself and I think, oh my God, you fucking idiot. And you might not even believe me watching this video. You might be watching this video now and thinking, oh, bullshit. I'm telling you right now, if you don't believe what I'm saying to you, and you're like, yeah, fuck this guy, which is fine, that's your own choice, you will get 5 years down the line and you will remember this video and you'll be like, fuck me. That guy was trying to help me 5 fucking years ago and I've been chasing my tail, drawing stupid fucking lines, following, Instagrammers that don't give a fuck about me. Yeah. And I should have listened to the guy fucking 5 years ago. Could have been way ahead of the game, I'm telling you. Right, I promise you. So now the education side of it, okay? So, when it comes to oil, I'll cover oil first. Oil really moves on supply and demand and wars. That's pretty much it, especially Middle Eastern wars. And right now, you'll see oil is moving up. Yes, it's moving up because it can't just fucking stay down forever, but that's not the move. The supply is dropping and demand is dropping. That's fucking bearish all day long, guys. If you're buying into that, you're placing a trade with a higher probability of a greater probability of risk and a lower probability of return. That's what you're doing. So why would you take it, right? Just let the fucking thing rise. Ignore, then enter the fucking trade for sales as it melts, all right? Don't be greedy and think you have to take every trade, okay? So, when we're covering fundamentals here, I know when you look through all of this, you'll be looking at this and thinking, fucking hell, I'm never going to remember all of this, word by, PMI. I don't even fucking remember what PMI is sometimes. I'm like, fuck, what is PMI? You do not need to remember what all of this means. ISM manufacturing. Fuck, what is that again? I forgot. You don't have to do it. You don't need to be Albert fucking Einstein, right? You just need to know how to interpret these fucking numbers, okay? And I'm going to break it down to you so it's very, very simple. And if you do forget what it means, you see this little folder here? Just click the fucking thing and it'll tell you. Look, level of a diffusion index based on surveyed purchasing managers, blah, blah, blah. Usual effect, actual greater than forecast is good for the currency. Release monthly, it tells you here why traders care. It's the leading indicator of economic health, businesses react, blah, 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 right? You don't have to know all of that. All you need to know is what do these fucking numbers mean and how does it help me? How does it help me fucking pick a trade, right? So we're going to cover that right now. So every single country, let me just see if I can put another one on here. Let me just check pound first of all as well. Every single country has manufacturing and services. Okay, every single country has manufacturing and has services. Okay, however, countries will either predominantly be manufacturing countries or they will be predominantly services countries. So, for example, excuse me, the UK is a services country. It's not a manufacturing country. Yes, of course, we have manufacturing, but it's not what we're known for, right? We're a services country. We provide banking services. We let Russians launder their money in London by buying apartments and not living there, you know, and all this kind of shit. So we provide services, right? The banking world, everybody loves FCA regulated. It's all fucking bullshit. It's pointless if you don't live in the UK or business isn't in the UK. So it's pointless regardless, okay? But anyway, everybody loves a good FCA regulated or I'm FCA licensed. Fucking bollocks. When it comes to France, France is a services country, not a manufacturing country. But of course, they manufacture Renault and all this other stuff. They do have manufacturing, but they're a services country. When it comes to Germany, Germany has services, but it's a manufacturing country. Japan, manufacturing country. China, manufacturing country. USA, services country. You know, Switzerland, Swiss banking. You know, it's a services country. They don't manufacture fuck all. You know, maybe a couple of bushcraft knives. That's about it. So you get my point, right? I mean, even fucking Swiss watches are made in China, so so they don't even make that. So yeah, so this is how you would look at it, right? Now, very simple. You see these numbers here, right? 49, 50.3, 54, 46, okay? So here's the easy way to remember it, and make a note of this. When these numbers are from 50, i.e. 50.0, up, you know, 51, 52, 55, 56, blah, blah, blah. That means bullish, okay? That shows bullishness in the economy, okay? When they are below 50, like from 49.9 downwards, 48, 47, 44, that means bearish, right? It's very fucking simple. Very fucking simple. 50 and above means bullish. 49 and below means bearish. Okay, so for example, bearish, bearish, bullish. Okay, now what we then do is we then look here to the previous one. So we can see it was previously 48.8. Okay, now it's at 49.7, which is going up and it's been painted here green. Okay. Now, many people don't know how to interpret this. Will see that it's risen from 48.8 to 49.7 and go, fucking hell, it's bullish. That's great news. No, it's not bullish. Is it good news? Yes, it is, because it's showing that there's positive gain, there's positive strength. Look, 46.5, 48.4, 48.8, 48.7. So that's positive, that's good news that things are getting better. They're getting more orders, more manufacturing. So it's signs that it's growing. Okay, it's growing. Yes, it's good, but it's still bearish. Okay, it's still bearish until it crosses 50. Okay. Now, on the flip side of the chart, you may see this and you say, oh, look, it was 54.8 before. Now it's 50.3 and it's red. That must be bearish. No, it's bullish. Now, yes, things have gotten worse. So it shows you that in ISM manufacturing prices, things are slowing down. Okay, that's probably because people are worried about Trump's tariffs and stuff coming in, right? He said he's going to slap Canada, he's going to slap Mexico, he's going to slap China, you know. So that could be to do with it. I'm not saying it is, but it could be one of the factors, okay? So, yes, things are getting slightly worse here, but that is still bullish. Okay, so we've got bearish, bearish, bullish. Construction spending, yeah, when it's month on month, we don't really care. It's just like, yeah, whatever. What we care about is quarter on quarter. It's like, yeah, that's okay, and year on year. Those are the ones that we really, really care about, right? Because it shows you real growth or real contraction over that time span. When it's monthly, it gives you the kind of story of what's happening right now, okay? But we don't care about it long term. So now, moving on, jolts. Okay, so job openings. You can just click on this. It'll tell you what it is. Labour costs, number of job openings during the reported month, blah, blah, blah. Actual greater than forecast is good for the currency, okay? It tells you here if you ever forget. Now, also here, you can see how we have been doing, okay? Up, up, down again, okay? You can kind of see that there. If you want the graph, you can click on the graph here. And you can get a visual representation of what that's been looking at. It's been gradually coming down, okay? Excuse me. So we want to see that up, okay? So that's up. Now, sometimes you will come here and it'll be bullish, 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 bullish. You're like, fucking hell, everything's bullish. This is fantastic. It's all strong. Other times you will get the same, but the opposite, bearish, 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 blah, blah, blah. Excuse me. And then other times you will get what's called mixed data. You get this will be bearish, this will be bullish, this will be bearish, this will be bullish, bearish, bearish, bullish, 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 bearish, bearish, bearish. And you're like, fucking hell. That's just simply called mixed data, guys. And it just means, if you look at those pairs, you'll see that it's just ranging, right? That will interpret onto the chart as ranging markets. Where you get the trend, an uptrend or a downtrend, is where you get the divergence between two economies. Like the example that I gave you earlier with the British economy being fucking fantastic and the Japanese economy being absolutely dog shit, you will see the markets looking like this. It will go up, down, up, down, up, down. That's where you get the trend, right? That's what you fucking want. Trend is your friend. Where are we now? Okay. Excuse me. So, economic optimism 54, that's positive. Ward's total vehicle sales is up, that's fantastic. Excuse me. Non-farm payroll change is down. Again, look, if you're ever like, oh god, what does that mean again? It will tell you right there. Where are we? Actual greater than forecast is good for the currency, okay? So you can see this is negative news. Where are we? Final services PMI. These are fucking great numbers, guys. Yes, it's red. Why is it red if it's good numbers? And this annoys me about Forex Factory because previously it was 57. It was forecast to be 57, and it's came in lower at 56.1. Okay, so it's showing some signs of slowing down. However, 56.1 is fucking fantastic, guys. That is massively bullish. Okay, it's not bearish. It's not negative. That is bullish. Okay. That's here, 52.1. Yes, it's dropped from 56, but it's bullish, right? It's bullish. It's still above 50. This is where people get it wrong. Factory orders month on month has increased. Bullish. Crude oil inventories, we don't really care about that, but it's minus 5 million. So it's minus, that means, yeah, so higher demand from what they have in the stockpile rate. However, this changes weekly, and this is it's kind of false numbers in terms of it looks like there's greater demand because it's at minus 5 million. So that means, oh, people must be buying more because we're at minus, right? Instead of a surplus. No. If you know people in the oil industry, what they'll tell you is right now, rigs all around the world are fucking shut down or they're on standby. They're just churning over at minimum output because the price of oil shit. The price of oil right now is $70, right? It costs oil companies $75 a barrel to get oil out the ground. So they're losing money. If they keep pumping money right now when oil is at $70, they are fucking hemorrhaging. And I mean hemorrhaging money, right? Now, if they take oil out of the ground and they put it into storage and wait for the price to go up and then start selling it, they fucking lose money as well because it costs an absolute fortune to store oil. Okay, so that's why they don't do it. That's why they just halt production and just keep it churning over minimum just to keep the cogs fucking oiled up. Excuse the pun. Okay, that's why they do it. So this here, you might look at that and go, fuck, it's minus 5 million. And normally we look at that and be like, wow, demand's high. That means price is going to go up. It's a false demand high because production has fucking plummeted. So there's very little production. So what oil is being produced is being bought up, right? So it looks like there's a higher demand, but there's not. It's just people are buying the very little oil which is being produced right now. Hence why you're seeing this price rise, okay? But overall, excuse me, rigs are still fucking closed, guys. They're on standby. They're shutting down for maintenance, and rigs do not shut down for maintenance if they know that there's going to be big oil production coming up. They don't. They would rather just limp and get as much out as possible. And then when the price of oil shit and they know that there's no production, essentially compared to before, then they will then shut down that rig and conduct maintenance, which costs them a lot of money. They will never shut down a rig during high production or if they anticipate high production because they're going to lose a fucking fortune, right? So they just don't do it. So it's a telltale sign. When rigs close down for maintenance, that tells you they already know production for next year is going to be dog shit. That's why they're closing down for maintenance, okay? Another massive telltale sign. Another little golden nugget there for you, all right? Unemployment claims. So, challenger job cuts. Yeah, we just have a quick look here and here. You can see it's not a major thing, but unemployment claims, yes. So, unemployment claims have increased. That is not good. If unemployment is low, that's good. Why? Because it then means that more people are in a job, right? If more people are in a job, why is that good? Because it means more people are going to pay their mortgages. They're not going to default on their mortgage payments, which of course is bad for the economy. If people can't pay their mortgages, that's bad for the economy, right? Because the banks are then losing money. If unemployment is up, it means more people are out of jobs. More people are, potentially not going to be able to pay their mortgage. You know what it's like in the Western world? I used to be this guy. We used to fucking live month to month, right? It seems to be this Western world fucking thing where we seem to live paycheck to paycheck. As long as we have a nice house and a fancy car that we can show our mates pretending that we've got fucking money in the bank, when the reality is, usually the week before we get paid, we have about £2 left in our bank accounts, if you even get to week 3, right? I've been that guy. I'm not judging you. I've fucking been that guy where, I was living this lifestyle, fucking driving around in a fucking leased Mercedes, with fucking 20 quid in my bank. I have been that asshole in my life. All right, excuse me. Let me just top up my yerba. So, if you are unemployed, it means you don't have any money. It means you're claiming benefits from the government, which is not a lot of money. It's just enough to help you survive, right? Which means you're probably going to default on your car payments. You're probably going to default on your mortgage. You're probably going to default on paying your credit card bill. You're probably going to default on paying your mobile phone bill, your internet bill, your Netflix bill, your fucking Sky TV or whatever, So unemployment is a really big thing. If unemployment is massive, you're like, wow. It's not just to be taken black and white, like, oh, many people have lost their job. Oh, that's not nice. You have to think about the big fucking picture. What does that mean when many people have lost their job? And it's what I just explained to you there, right, without going through it again. On the contrary, when unemployment is low, that means employment is high. When employment is high, that's fucking fantastic. It means you already know more people are going to pay their car. They're going to pay their phone bill, their fucking Netflix. They're going to pay their mortgage. They're going to pay. They're going to be able to buy fuel. When they've got more, when average earnings are up, which we're about to cover now, right? Average hourly earnings. You can see these are kind of sticky from before. They were expected to be lower, and they're not lower. They've remained the same, 0.4. So that means they're higher. Now, why do we care about average hourly earnings? Well, if people are earning more money, what do? They buy more shit, right? They don't put it into savings and think, oh, I'll keep this for later. We are human beings. We are consumers. That's why they fucking call us consumers, because we are fucking human termites. We consume fucking everything, right? That's why they've got paid ads in front of your face every 10 seconds, because they know that we're fucking gullible and we will buy fucking air rifles, we'll buy fucking snooker tables, we'll buy random fucking shit when we have got extra money that we don't need to buy. But when we've got a bit of money in the bank, we'll fucking spend it, okay? That's why we are consumers, because we fucking consume. So when average hourly earnings is up, or at least it's sticky and it's good, that means people will have more money in their pocket. When people have more money in their pocket, they're going to spend it. When they spend that money, and it stimulates the fucking economy, it keeps things fucking moving around, right? So that's why average hourly earnings, that's why we want to pay attention to it, because it's a sign if an economy is doing well or not. If the economy is doing well, it means the currency will do well. If the economy is doing poorly, it means the currency will most likely do poorly. All right? It's very fucking simple, guys. It looks hard when you look at this and you go, fuck, I don't know what I'm reading here. But now that I'm explaining it, hopefully the penny starts to drop and you're like, this is actually pretty fucking easy. And I hope you're making notes, all right? Anyway, it's going to be on here. You can watch it anytime you like. But make notes so that you can go away and read them. Look, I used to make, these are all my notes from years ago, you know? I used to make notes from years ago. That's why I thought... So that's why, sorry, my screen recorder cut off there. That's why I had the idea to write this up, because I found this old notebook. I thought, fucking hell, I remember writing all that. So yeah, make notes on this, right? So you can always come back and check it out, okay? So where were we? Let's move on. Final services PMI is, it's above 50, so it's bullish. Above 50, bullish. Things are slowing down, yes, but it's still bullish, okay? You don't have to think too much on it. Crude oil, we've covered. Unemployment claims, we've covered. Trade balance. Now, when it comes to trade balance, this is to do with how much a country exports and imports, okay? So if it's negative, i.e. if it's in a deficit, it means that that country is importing more than they are exporting. So it will be in a deficit, okay, in minus. If a country exports more than it imports, it will be in a surplus. It will be in a positive. So if it exports more than it imports, that's a positive for the country, okay? If it imports more than it exports, then that's not very good, okay? Because they're essentially buying more than they're selling, right? And the way to make money is to sell stuff, okay? So that's what the trade balance is all about. Average hourly earnings, yet we've covered that. Non-farm employment change. So this is basically employment change, which doesn't include farm work. Okay, that's all it is. Non-farm means they're showing you jobs like your everyday job, your call centers, your road workers, your doctors and nurses, your construction workers, your plumbers, blah blah blah. Right. The reason why they take out farm, from non-farm employment, it's because farming is very seasonal, right? So you might, let's just say in fucking July is strawberry picking season, right? And the farmer's got acres and acres and he needs fucking people to come in and pick strawberries. Or even if he has machines to deal with, getting the fucking strawberries, he needs people to then sort the strawberries, and spray them and pack them and blah, blah, blah in the factory, right? So it's seasonal work, but maybe he'll only use those workers from July and August, and at the end of it, bang, they're gone. There's no need for them anymore. So there'll be, tens of thousands of people out of a job. So it's not seen as being real unemployment because it's seasonal work. So if they included it, you wouldn't really get to see, the people who are in real full-time, long-term employment. That's why they have the non-farm stuff, okay? So non-farm, when that's up, that means the amount of people who are in employment, which does not include working on a farm seasonally, is up. Now that is fucking fantastic. That's a massive jump, okay? That's fantastic. Excuse me, if more people are in a job, more people are paying their bills, more people are going to the cinema, more people are eating takeaway, more people are fucking, I don't know, taking the family out to the safari park. They're buying fucking Jordans. They're making the economy, go round. Okay, so that's why it's good. Unemployment rate can also be up when employment is up. You can see that here. It's only up slightly, but there could be, there might be a certain state where they've just a flood or a tornado or blah blah blah, and that's then meant nobody has a fucking job because their job's been fucking blown away in the tornado. You know what I mean? So that's why that can happen as well. Not the only reason, of course, but it is an example. Consumer sentiment is quite good because it shows you if it's not important, very important, but it's moderate. It shows you that if people are willing to spend money, if people are happy, they've got money, they're not feeling skint and broken. Oh, I'm living paycheck to paycheck. If they don't feel that way and they feel good, like I'm a little bit flush, they're going to spend more money, right? So that's why it's quite good. Inflation expectations 2.9. Okay. Consumer credit month on month is up. So why is consumer credit being up a good thing, right? It's essentially, why is why are banks giving bank loans? Why is that a good thing? Getting into debt is not fucking good, right? Well, why it's a good thing for the economy in terms of trading is if the banks are giving you more money, right, to spend, then, well, sorry, if the banks are lending you more money, what are people going to do with that money? They're going to fucking spend it. They're going to buy new cars. They're going to maybe put a deposit on the house. They're going to spend it on shit, right? They're going to go on holidays. They're going to buy a fucking jet ski. They're just going to buy shit is the point, right? They're going to spend that money. And by spending that money that they get from bank loans, they are then stimulating the economy. That's how it works, okay? That's exactly how it works. And that's why consumer credit, i.e. people getting bank loans being up, is a good thing, because you know that when people get these bank loans, they're going to spend that fucking money, right? Because we're all idiots. We buy a load of shit that we don't need to impress people that we don't fucking like. And that's the way the world is. Now, let's look at other things. I mean, they're all pretty much the same. We don't have to cover every single pair here, guys, because it's all pretty much the same, all right? Manufacturing PMI is down. See, it's now at 48, and it's getting worse. So you can see that that's down. But what did I say? The pound is not a manufacturing country, so we don't really care about it. But it's nice to see. Look, we're a services country. Services is up, fantastic. Construction PMI is up, fantastic. So we've got bullish, bearish, bearish, bullish, bullish, bullish. The pound is a fucking powerhouse right now. Absolute fucking powerhouse. It's doing very, very well now, right? When you look at this, right, let's look at euro, right? So let's use the example of USD and euro, right? Let's look at euro. Look, bullish, right? Getting worse, but bullish. Bearish, 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 bearish. It's unemployment's a little bit better, but it's still shit, right? Unemployment rate, terrible, sticky at 6.3. When it comes to euro, we don't really give a shit about Spain and Italy. We only really care about France and Germany because they're the biggest, economies that actually make a move, or make the euro move, I should say. Okay, we do take into account Spain and Italy and blah blah blah. If it's like PMI and it's yearly, we absolutely do, right? But the ones that we really care about is France and Germany. Okay, so again, look, bullish, bearish, 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 bearish. Bearish, bearish. Bullish. Sorry. Budget balance still shit. And it's getting a little bit better, but it's still shit. Bullish, bearish, 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 bearish. Sorry, that's bullish. Sorry. Bearish. So why is that green? It's green because they thought it was going to be -2 and it came up slightly better. But look, it's went from 7.2 to -1.5. The reason why it's green is because they anticipated it to be even worse. They thought it was going to be -2 and it came in at -1.5. So it's came in better than forecasted, okay? But look, so that's why it's green, because it's came in better than it was forecasted. It came in better than what they priced in, okay? But look, it's went from 7.2 to -1.5, so that's fucking terrible, right? That's bearish. Bearish. Don't care. Bearish. Bearish, 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 sticky, sticky, right? So you can see, Stevie Wonder can see there, the euro is fucking shit. It's bearish. You can see that pound and USD are fucking strong. They're powerhouses, right? So you now know that if you're trading, you don't want to be trading GBP USD because two economies are strong. You don't want that. You want to find a strong economy with a fucking weak economy. Pound yen, USD yen, pound euro, USD or euro USD, So you now know that if you look on euro USD, you are looking for sells. That's it. You're looking, why? Because the euro economy is fucking wank. And the American economy is fucking great. So I don't even know if I have it here because it is such a shit pair. But I'll find it. Hold on. I don't even have Euro USD because I don't trade it. It's so gay. I don't even trade it. Let's just see if I've got it down here for an example. Yes, I do. This is my example column. And what do we have? Bearish. Fucking bearish. Right? There we go. Now, will it retrace? Yes. It's probably going to either retrace up to here or it will retrace up to here. This point here. Okay? I'll just zoom in. This is my kind of technical analysis where I look for points of entry. You look for a small candle. Look, small candle, large engulfing. You wait for the market to come back, retest that zone, and then melt. When you also have this here, boom, shows you where volume kicked in. You mark up this, volume can potentially come back here and hit there. Areas of value. Ryan, you keep talking about areas of value. How the fuck do I know what value is? Well, you use your Fibonacci retracement, okay? What does a Fibonacci retracement do? It doesn't just show you pretty little fucking numbers on the side of your screen. These numbers donate areas of value. That's what these numbers are. It's value. So basically, shit value. So if this market just comes to here and rejects, I may not take it because it's shit value, right? Personally, I like it when it comes to the 618. Look, boom, bang on the 618 or the 786, okay? I will pretty much always take trades if it hits the 618 and the 786. If it hits the 500, I think about it like, if there's really strong fundamentals for one currency than the other, then I'll be like, yeah, fuck it, I'll take it, you know. But I usually wait for it to come back and retest the 618, okay? Or the 786, even better. If it comes to, like, let's say it was down here and it was in the 382, I don't take those trades. They're wank. They've just, over the years, I've just marked that they're low value and they've always got the highest probability, of pulling back deeper, you know, and then stopping you out and blah, blah, blah. So you're increasing your losing trades, right? It's just shit. Sometimes it comes to the 3-8 guys and then it just absolutely melts and you're like, oh, well, I've missed that trade, okay? Who fucking cares? It's not a high probability trade. It's just a trade which happened to work out in that example. Okay, that's it. Sorry, just hopping up my tea. So you can see how easy that is. USD economy is fucking fantastic, right? Euro economy is fucking dog shit. So I now know I'm looking for sales. You know, obviously that's previous news. Boom, fucking sales. Now, the news will still be shit. I'm just waiting for this. Boom, boom, boom. That's what I'm waiting for. Right? Or you're probably going to get this. There you go. Right, so you can enter here, which is higher risk because it's, you know, it may pull up to here, or you can wait for the, you know, break below, retest here, boom, boom, and then you enter here, which is safer, stop loss above previous high. I would really have to wait for this, to be honest with you. You know, that's really my trade. But because the 200 EMA is here as well, you may only get it to here. All right, that's just an idea, okay? But now you can see how you fucking piece this together, right? So what I do first off in my method, number one is fundamentals. It's number fucking one. It's my reason for taking the trade. So now you get the picture, right? If you said to me, Ryan, why are you taking Euro USD sales? I can give you a genuine reason why I'm taking Euro USD sales. I'm not just saying because it broke a fucking stupid line on my page and I believe that it's going to fly, mate. I have a gut feeling it's going to fly. Gut feelings don't make you fucking money. More often than not, you will lose your fucking money. Now, it's a little bit oxymoronic because, yes, once you've been trading for a long time, you do start to get a kind of intuition, right? But it's not like, oh, that's going to fly now. No, why is it going to fly? You know, if you look, you will have people who will look at this and be like, yeah, that's going to fly now. Why? Well, just because it's down here. It may come up, absolutely. I'm fucking waiting for it to come up. But it doesn't mean it's going to fly. That's not the move. This is just a profit taking, which will make it come up. The move, the real fucking trade that we want to get is when it comes up here and boom, fucking melts. Or better still, comes up here and fucking melts. So you just need to wait, right? And it will do it. It will fucking come back. Or, failing that, what will happen is the next trade that you're waiting for is, you know, you really need to wait and see that it's broken here to take sales. So you can't take sales from here because there's no value to sell from. So you're either taking a sell from here, You're taking a sell from here, or obviously here, you know, it's highly likely, but either here, here, or your next sell would be once it breaks that, boom, comes back to the retest, and then goes, this is your sell, not this. You're ignoring this, because that could just be a liquidity grab, and then it could fucking fly away up again, right? It has to break, retest, reject, and then melt. So this here is your entry, okay? That's it, because that then becomes the new area of value. This is your previous support, once broken, becomes the new resistance, right? Support and resistance. It's fucking 101. Okay, so I hope that helps. So now you get my point, right? I now have a reason why I've taken the trade. Why are you taking Euro USD sales, Ryan? Because the Euro is absolutely fucking wank. It's in the hurt locker. It's totally dog shit. The USD is fucking flying. It's a powerhouse. So don't listen to all these people. How many of these people do you know are like, oh, the USD is going to crash. Oh, the market's going to crash. Shut up, you silly cunt. And then what happens is USD will have a retracement and they'll be like, oh my God, the market's crashing. Oh, the market's crashing. Sell, sell. It's not crashing, you fucking idiot. It's just a fucking retracement. How do you know that? Because the fucking data tells you it's just a retracement. It's not a market crash. You remember, maybe I think it was 2 or 3 months ago now, right? When we all woke up and the markets just started absolutely fucking melting from USD, right? And everyone again was like, oh, markets are crashing. The USD is crumbling. That's it. Recession. Blah. For the USD, it wasn't fucking crashing. What happened was Japan was previously at negative inflation. They were at minus 0.10%, minus negative inflation. So what does that mean? That means if you borrow money from Japan, you know, you're borrowing billions of Japanese yen, you don't have to pay back any interest. You just simply pay back the money that you fucking borrowed. You don't need to pay back any interest. So what happened? All these big fucking massive global entities around the world started borrowing billions of Japanese fucking yen. When people start borrowing billions of Japanese yen and there's a demand for the yen, what then happens? It gives this extra strength to the yen because everything else in Japan was fucked. Employment was fucked. Unemployment was fucked. Spending was fucked. Average earnings was fucked. Everything was fucked. So the Bank of Japan are like, what the fuck are we going to do to try and help our economy, or at least help our currency so it doesn't crumble, you know, it doesn't end up like fucking German currency in World War II, you know, or it doesn't end up like fucking Venezuela, you know what I mean? You could literally have a skip full of money, which is just, it's fucking pointless, you know? It's worthless. So they basically made their interest rate negative, which means you can borrow billions of dollars and you only need to pay back the money that you borrowed. You don't have to pay back interest. So because it creates a demand for the yen currency, everyone wants to fucking borrow it because it's free money, right? And then it gives that kind of false strength to the yen. Now, what people were then doing with the yen is they were converting it to USD and they were investing it in the United States. Why? Because the fucking interest rate in the United States is now 4.75. Back then, it was actually like, 5 point something. I'll just check right now. Back then, it was like 5.25 or something. There we go, look. Yeah, it was a way up to 5.40 at one point, right? It was way up to 5.40. So what does that mean? Shit, what have I done now? Oh, what the fuck have I done? Oh, there, okay. So what does that mean, right? That means all these big banks, they were borrowing Japanese yen for free. They were moving it across, putting it into USD. They were then investing and buying USD stocks. They were fucking buying the S&P, the NASDAQ, the US 100, the 500, the US 30. They were putting it all in fucking US stocks. US stocks were then flying. These companies were making fuck tons of profit from the billions of dollars that they made from using free Japanese loans. And all they had to pay Japan back was the money that they fucking borrowed. And they were left with huge fucking profits. So then, years later, when Japan finally decided to increase rates to plus 0.25 from minus 0.10, what fucking happens? Instantly, overnight, all of these people that borrowed billions and billions and billions of dollars to do what I just explained there, they now no longer only have to pay the Japanese yen back. They have to pay the yen back plus fucking hundreds of millions of interest, because the interest rate is now positive. It's up. So what happened? They all fucking shit themselves and they all sold their fucking stocks. They were like, fuck, hurry up. They had to sell everything, take as much profit as possible, pay off their loans of the Japanese yen plus whatever interest. And then like, fuck, and then just sit on the profit, which then made the markets look as if they were crashing. But they weren't fucking crashing. They were just cashing in. They were just cashing in their fucking trades, like you and I closing a trade. That's all that happened. So you get people, see when you see someone on fucking social media and they're like, oh, markets are crashing, USD's crashing, fucking global recession. They don't know what they're fucking talking about. Okay? It's bullshit. And the stuff that I'm teaching you here is exactly what happened. Okay? And I'm teaching it for free. Why? Because there's a lot of fucking cunts out there that will teach you a load of shit. A lot of these people have broker deals. Now, I have a broker deal. I'm not being fucking thingy here. I have a broker deal, right? But we literally get paid from the spread fee from the broker, right? That's it. It's literally $2 whenever someone places a trade. We get like $2 from the broker. It doesn't even. The client is going to have to pay that spread fee anyway. The spread fee isn't more expensive because we get a cut. The client has to pay the spread fee anyway. The broker just says to us, thank you very much for bringing us business. We will award you, $2 per lot, by the way. So if people are trading 0.2 lots, we're making like 20 fucking pence. Do you know what I'm saying? But on the flip side of that, it means that if any of our guys in our community have a problem, like, oh, mate, my withdrawal's taking a long time, or do you know why my thing was fucked up, or blah, 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 we can literally help them instantly, because that broker, that company knows that they're our guys because they're in our circle of affiliates, if you like, and we can then help them instantly. And I've done it multiple times when someone's had a withdrawal drama, a deposit drama, their account's not working properly drama, a spread fee drama. We've helped them instantly, right? Whereas when you go to the live chat, you're dealing with someone in fucking Nigeria or India, whatever these cheap shit fucking call centers are, and they can speak English, but they don't fucking understand English. There is a huge difference, right, between speaking English and understanding the fucking thing. Okay? So that's why we help. Now, these guys that I'm talking about that don't know what the fuck they're talking about and just join my free signals group. If you join my broker, signals are free. They have what we call scumbag broker deals. They will be getting 20 to 40% of all your losses. Not making £2 on your fucking spread fee or 20 pence on your fucking spread fee. They will be getting 40 fucking percent of your losses. So when you see all these fucking clowns like Daniel Savage and all that, he couldn't give a winning trade if his fucking mum's life depended on it. They're making money from your losses. They're buying these Lambos from your fucking losses. They're buying these Rolexes from your fucking losses. It's not from the trading, okay? Most traders are very fucking quiet, and they don't like to be known, right? That's just the way it goes, okay? So I hope that explained. I kind of fucking went off on a tangent, but I just like to explain to you, right, the whole fucking spectrum of it. I could literally be here for 2 days talking. There's so much involved, but I hope this has helped you, right? When it comes to things like CPI and PPI, right? I think that's on pound. Let me just have a look. We've got it everywhere really, but let's just have a look on pound just to see if it's there. Let's have a look at previous week. CPI, okay. CPI and PPI. These two are very good indicators, okay? So they're pretty much the same. It's just that one, CPI, is about consumers, and PPI is about companies, okay? So what CPI actually is if you can imagine you have a basket full of groceries, a litre of milk, 12 eggs, a loaf of bread, a knob of butter, a thing with butter, a fucking frozen pizza, a bottle of red wine, you know, blah blah, all this, you know, a bar of soap, razors, men's razors, women's tampons, you know, it all goes into a basket, and every month someone will go out and continue to buy those goods. If the price of those goods is more expensive next month than what it was this month, that shows inflation. Okay, that shows inflation. Now, inflation is not good for your eye, okay? Because it means that we have to fucking everything is more expensive for us, so it's not good for your eye, okay? We, as a human being living in the world, we don't like inflation. Inflation is fantastic for a country, okay? Like this central bank rates, that's inflation, right? That's great for a country and economy because it means that the higher the interest rate, i.e., the higher inflation, the more it makes me as an investor want to invest in that country, in that economy. Why? Because it means I will get a bigger return for my money, right? I will make more money. If I was to invest my money in the Swiss franc, I'm only getting 1% return. If I invest billions into pound or USD, I'm going to get 4.7 fucking 5. So where do I want to put my hundreds of millions or my billions? Am I going to put it in the Swiss franc where I'm going to get 1%? Am I going to put it in the Japanese economy where I'm going to get 0.25%? Or am I going to put my money in pound USD economies where I'm going to get 4.75% return? I'm going to put it in fucking GBP and USD because I'm going to make more money. That's it. That's how fucking easy this is, right? How crystal clear it is. It's not difficult. So that's obviously CPI shows inflation. When a basket of goods is more expensive, it shows inflation. Not good for your eye, but fucking great for the economy, which means if we're a trader, that's great. We like to see inflation as a trader, okay? Because it means strong. Or, I mean, even if it's coming down deflation, we still like that because then we know it's going to, we're going to be selling that pair and not buying that pair, right? So either way, we like it. But that's why it's a good indicator, okay? CPI and core CPI, you can just click on here and see the difference. It will tell you what it is. It takes stuff out. Mild impact relative to other causes of CPI. It tells you here what they're taking out. Oh, there we go. Change in price of goods and services purchased by consumers, excluding the volatile food, energy, alcohol, and tobacco items. Okay, so core CPI cuts that out. CPI, I'm sure, includes. Yeah, it includes these things. Okay, so that's the difference between CPI and core CPI, blah, blah, blah. Now, PPI is pretty much the same thing, but it's for companies. It shows you the price in which companies are buying the raw materials. For example, my fucking microphone here, right? Okay, my microphone here. This has to get made in a factory, right? So the price of these raw materials is PPI. If that price goes up, right, do you think that company is going to take an increase in price? Like, if they're buying these raw materials that are now more expensive, do you think they're just going to take that on the chin and have less profits? Or do you think if PPI is coming in higher, which means these raw materials to build all this stuff are more expensive, what are they then going to do? They're then going to increase the price of their end result. So the end result being this fucking microphone stand, right? They're going to increase the price of that so that their profit is not affected. They're going to still keep their profits, but they're going to increase the price, which means CPI will, of course, be higher. So this is why these two things are good indicators to show you if inflation is going to be going up. Now, when it comes to rate cuts, economies shouldn't really be cutting rates when everything is going good. Like right now is a prime example for the USD. Right? USD are still talking about rate cuts, and it's like, what the fuck are you doing? Because if you cut rates too soon and inflation and everything's still going up, inflation is going to run away. It's going to be uncontrollable, and you don't want that because then there'll be a big fucking crash. So they want to avoid that. They need to, pardon me, they really need to manage inflation, okay? That's the whole point in it. They really need to manage inflation. And that's it. Now I'm going to show you this. It goes in cycles, right? This is the last thing I'm going to show you guys. It goes in cycles, okay? So look, you'll have 3 to 5 years of goodness. Look, slow, grow, 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 grow. Growth is always slower because we love inflation. Deflation is always rapid. Look, crash, crash, crash. It's always rapid. Same again, slow, 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 plateau. Now, you know, boom, we're at time to come down. It'll probably come down a little bit lower to around here, and then it'll take off again next year because Trump is the man. Now, just close these. Now, if we look at pound graph. Sorry. Hey, sorry. What the hell am I doing? It's not showing me the end of that there, is it? It's not showing me the end. Okay, let me pick a different pair. It's the same. It's just obviously you get better examples than others, right? Let's have a look. Maybe Aussie. Let's try Aussie. There we go. Oh shit, can't I get to the end of it either? But look, here we are. Look, steady, 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 plateau, crash. Steady, 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 plateau, crash. Steady, crash. This has been handled well. Boom, 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 plateau, bosh. You get the picture, right? So that's basically the market cycle. Markets work in cycles. You will have bullish cycles and bearish cycles. For the most part, all markets want to be bullish because that's where we make the money. But things can't be bullish for for entirety. They need to have crashes to kind of reset and adjust, and then they'll carry on again. Okay, so I think that is pretty much it for me. I'm not going to really go in depth on oil, gold, and blah, blah, blah. I mean, we've already covered fucking more than an hour on this video, okay? It's a lot to process. It's a lot to digest. But I hope that I have made it very clear how simple this is, okay? I hope I've made it very clear how simple this is, because it is simple. It's simple to read. It's only hard when you don't know what you're looking at, right? Once you know what you're looking at, it doesn't matter what pair this is. You can look at any fucking pair. CAD. It's all the same. It's all the same. You know, CAD got a little bit of strength recently. Positive. You know, bullish. Fantastic. bullish. That was back in November, I know, but you know, let's have a look. You know, it's been, look, bullish, fantastic. Bearish, bullish. Yeah, correct. So yeah, that's it, lads. I think it's that last week and this week coming. So Canada's got this mild strength. You wouldn't say that the economy is massively strong, but you can see we do have some strong numbers for this time of year, right? We're coming into Christmas now, blah, blah, blah. So, yeah, you can see how it works. Just remember with pairs like the Canadian dollar, Canada is very heavily in touch with oil, okay? So if oil's doing well, Canada, the Canadian dollar will do well. If oil's doing shit, the Canadian dollar will, in general, be doing shit, okay? When people talk about USD being strong, gold is weak, and vice versa, that's actually bullshit. It's nothing to do with USD being strong and gold being weak. It's about risk on, risk off sentiment. If you look back, you know, this year, you'll see USD is flying and gold is flying at the exact same time. So if USD being weak means gold is strong, was correct, then how is that fucking possible? It's possible because it's bullshit. It actually has nothing to do with USD being strong and gold being weak and vice versa. It's to do with risk on sentiment. So when things get risky, when, you know, a war kicks off and people think, fuck, the US might get involved in this, people then withdraw their money from a USD and they'll throw it into gold. Just to see, markets will go from risk on to risk off for about a week, right? Then if they do get in a war and the war becomes normal, like Russia and Ukraine, you see that when Russia and Ukraine kicked off, gold flew, right? All the Russians fucking moving their money out of Russia, out of ruble and putting it into gold because no one knew what the fuck was going to happen. But when the war became normal, gold started retracing because people were withdrawing their money out of gold again, blah, blah, blah. So markets will be risk on for like 98% of the time and risk off for a couple of percent of the time, okay? Again, all that type of stuff is another lesson for another day, okay? But I hope you found this useful, guys. This is our last month for giving you a free month in our premium Discord. The normal price is £97 a month. That's full education, daily mentorship. We give signals, i.e. if I'm entering a trade or my business partner Lee is entering a scalp, he'll give you it. If I'm entering a swing trade, I'll tell you what I'm entering. All of my trading is done live in front of your face. You can see my live managed accounts. All of it's done in front of your face, you know. So you can see that we're not just telling you, oh, I took this trade, but we're not fucking showing you it. You can watch me do it live. You can ask me questions live. And more importantly, we provide mentorship, not just education, because anybody can sit down and watch a fucking video, right? Like this, like you're doing right now. But mentorship is key. So you can ask me questions and ask Lee questions, and you can actually learn that way. Okay. Very, very important. So I hope this video has been good for you. I hope you get a lot from it. I hope it helps, and I wish you all the best in your trading career, okay? Below this video, there'll be a couple of freebies, like my free trading rules. There's something else in there, I can't fucking remember. There will be the link to what else I use, which is this. So number one for me is fundamentals. Number two is data. This is data. Number three is then technical analysis. Where am I going to enter? So if you looked at, this is called Prime Market Terminal. You get a 15% discount from my link below. GJ, this is a phenomenal tool, right? Don't look at it and shit your pants thinking, fuck, I don't know how to read that. It is a little bit daunting, right? Because it looks like a lot of information. You don't have to use all of it, but it's a very good tool. You can look at overview, right? GJ. And it's like, okay, it's telling you it's kind of neutral just now, right? But we know from fundamentals, we're really looking for buys. Seasonality. This takes data from the last 5, 10, and 15 years and tells you that over the last 5, 10, and 15 years, you want to be buying in the month of December. You don't want to be selling, okay? Then we look at DXM, Dumb Money Index. This is retail traders, basically retards that don't know what they're doing. 76%, look down here, 76.9% of all traders lose money with this provider. You do not want, if you look on here, and retailers are fucking selling GJ, you know, if it's, this is kind of 50-50 right now because they don't know what they're doing, right? Yeah, there is 50-50, right? You want to be doing the opposite of these guys. If this is like 70-80%, they're in sales. You want to be doing the fucking opposite because retail traders are the liquidity for the big boys, okay? Then you come here. This is called COT, Commitment of Traders. This is essentially the banks, right? Every single Wednesday, by law, banks are required to submit all of the trades that they're in. It's to try and avoid insider trading. We all know it doesn't, but that's what it's for, right? By law, they must. Every Thursday, those trades get verified, and every Friday, that information gets released to the public. You don't have to use this to find it, but if you find that information on your own online, it's very hard to decipher it and understand it. Like, what the fuck does all this mean, the way they do it? So platforms like this put it in a very easy to see, manageable way, you know? So look right here. All the banks are fucking buying GG right now. They're fucking buying GG and they're selling yen. They're fucking selling it. Look, the net positions increased from 6.1 to 7.6. They've increased their net positions from 14,000 to 18,000. So if you look at this, again, why the fuck would you be selling GJ? It tells you right there. Fundamentals, buys, data, the banks are buying it. So why would you be fucking selling it, right? It's phenomenal. And then after this, you then go back to GG and you can look for your entries. I think I already marked an entry up. GG. There we go. I already had the fucking entries marked up. This was a better one. This was the second best one. But look, if I move that out of the way, it's fucking came in. Boom, and away it goes. Right? That's how you fucking trade, lads. I'm telling you. If you're doing swing trades, you know, or day trading, that's how you do it. All right? So, yeah, much love. I'm Ryan Mack. Come and check us out, the trading guys, if you wish. This is the last month. We are doing one month for free. I won't get into why we're fucking stopping it, 'cause it was shit. We just got loads of freeloading fucking idiots before. See, when you give stuff away for free, you just attract idiots and fucking brokies that they've got £5 in their bank, or a $200 account, and they've got no more money. And the last thing you should be doing on this fucking planet, guys, if you don't have money, you've got fucking £200 in your fucking bank, you should not be getting involved in fucking trading. It's the riskiest business on the planet. And number two, you won't make any fucking money from having a shitty little account, okay? That sounds horrible to hear. I'm not having a pop at you. I'm just telling you what you need to fucking hear, okay? All these fraudsters will tell you, yeah, you can open an account with $500, $1,000, then you come. It's because they want to take your fucking money. They know that you're going to lose it, and they're going to gain it, okay? I'm being real with you, and that's probably why you don't like what I'm saying right now, because I'm being fucking honest, and people can't handle the truth, okay? If you do not comfortably have £1,000 that you can lose, £5,000, £10,000 that you can lose, and be like, okay, I gave it a bash, then you shouldn't be getting involved in trading, because you don't have enough funds, right? I'm not saying don't learn it. You can learn it, but at least just do it on a demo account. Don't touch your money. Grow your money, build it up first of all, and then you can start trading it, okay, once you learn it. Okay, guys? So we all have to start somewhere. I've been broke before. I know exactly how you feel. So this is, I'm talking from a position of love here, right? Not from a fucking position of thinking that I'm better than you. Not at all, right? I've been in your position. It's fucking shit. I know that. So that's why I'm trying to help you, okay? So you don't have to pay for this fundamental stuff, okay? Much love, guys. I'm Ryan Mac. Don't forget to check us out, www.thetradingguys.com. Have a great week, and have a great Christmas and New Year.